What happens when a country decides to take a bold leap forward in securing its economic future? This is the question Ireland has posed with its recent decision to establish a £100 billion wealth fund. In a world where economic security is more important than ever, the Emerald Isle is setting a precedent for other nations to follow. Ireland's plan is ambitious, to say the least. The Future Ireland Fund, as it's aptly named, is set to be established by the mid-30s, with its assets primarily sourced from the corporation tax windfall received from global companies. It's a move that signifies Ireland's commitment to securing its economic stability while leveraging its standing as a corporate hub. The man at the helm of this grand plan is none other than Finance Minister Michael McGrath. His recent announcement of a multi-billion euro package aimed at various sectors paints a picture of a country ready to invest in its future. From supporting childcare costs and reducing college fees to offering credits for energy bills, the package is a testament to Ireland's focus on its people. So, is this a bold economic experiment, or is it a calculated move to secure future prosperity? The answer to this question might be more complex than we think, and that's what we'll delve deeper into in our next segment. The Future Ireland Fund is not just a sovereign wealth fund, it's a beacon of hope for Ireland's future. This ambitious project is a testament to the foresightedness of the Irish government, which plans to establish this fund with assets of €100 billion by the mid-30s. The initial seed comes from a hefty €4 billion from the existing budget reserve, but that's just the beginning. From 2024 to 2035, the fund will receive annual contributions equivalent to 0.8% of Ireland's GDP. A move like this is not only substantial but also sustainable, ensuring a steady flow of capital into the fund. But what's the purpose of this fund, you might ask? The Future Ireland Fund aims to protect living standards and public services, especially in relation to an aging society. As societies age, the need for robust public services becomes even more critical. The fund will play a vital role in ensuring that these services are not only maintained, but also enhanced. Moreover, the Irish government has earmarked a separate €14 billion for infrastructure spending and climate change measures. This pot reflects a commitment to not only sustaining the economy, but also protecting the environment, a dual focus that is crucial in today's world. This fund is more than just a financial move, it's a strategic investment into the future. But what does this mean for the Irish economy? With every economic move, there are ripple effects. The Future Ireland Fund is no exception. Like a stone tossed into a pond, the creation of the Future Ireland Fund sends waves through the Irish economy. This initiative, born from the significant increase in corporation tax receipts, has led to a budget surplus. But what does this surplus mean for the Emerald Isle? Well, it's a bit like finding a pot of gold at the end of a rainbow. However, the Irish government recognizes the fleeting nature of this fortuitous event. As quickly as a rainbow appears, it can also fade away. That's why they're not spending this newfound wealth frivolously. Instead, they're investing it wisely into the Future Ireland Fund and an infrastructure and climate fund. Think of it as a savings account for the nation. This isn't about immediate gratification, it's about safeguarding the future. The goal is to protect living standards and public services, especially in light of an aging society. It's about ensuring that the luck of the Irish continues for generations to come. But there's more. A separate €14 billion pot has been set aside to protect infrastructure spending during economic downturns and invest in climate change measures. This is a clear demonstration of Ireland's commitment to sustainability and resilience. It's a game plan that acknowledges the challenges of the future and meets them head-on. However, like any economic strategy, it's not without risk. There's a degree of uncertainty involved. Will the investments pay off? Will the funds be enough to navigate future economic downturns and address climate change? These questions can't be answered with certainty. But one thing is clear, the Irish government is proactively planning for the future. The Irish government has chosen to invest in its future, but only time will tell if this move will pay off. Ireland's move is not just a national affair, it sends a message to the global community. With the establishment of the Future Ireland Fund, the nation is laying down a marker, demonstrating how countries can safeguard their economic future by harnessing corporate tax windfalls. This move comes at a time when the world is increasingly looking to crack down on multinational corporations and their tax arrangements. Investors around the globe are growing more concerned about the tax policies of the companies they invest in. In fact, some are even making investment decisions based on these policies. However, it's important to note that there's a cultural difference in how shareholders approach this issue. While some are pushing for stricter tax regulations, others argue against demonizing companies for legally using existing tax loopholes. Ireland's decision to invest its corporate tax windfall into a sovereign wealth fund aligns with the global trend towards greater tax transparency. It's a clear signal that the country is taking steps to ensure its economic stability and growth, while also contributing to global efforts to regulate corporate tax practices. The Future Ireland Fund is a testament to Ireland's commitment to its economic future. This move could potentially change the way countries around the world approach their financial security.